Morning, everyone. It's Chris from Solstice ATR as well as Excel. You can find me on both websites, Twitter, which is X now, Instagram, as well as Discord. You can DM me on either Discord or on Twitter for me to help you out. We do use adaptive algorithm for the side market, up market, as well as the down market. Remember to subscribe for the YouTube. The weekly video is for free for everyone, giving you an outlook for the coming week. And let's start first by looking at the overall market. And remember, we're not a broker dealer. Past performance doesn't give us an indication of future results. Use at your own risk. And data may not be copied unless requested from us. I have up here the volume profile on the NASDAQ 100, which can be similar to the QQQ. I put the micro and Q because I don't want to put too much Fibonacci's or levels on it. I wanted to show the prior week's gap. On Tuesday, there was a gap here on Wednesday morning, which we never retested. This is the lower gap. We rallied up. We had an up day. This is the value high, value low, and the point of control. I kind of marked them. This was an overlap to a breakout. That was the prior day's high. You broke out. And if you look at, on Friday's range, this was the value area high, value area low, point of control. We had the previous day low here. It's called PD low, previous day high, PD high, and I marked it. We were trading inside the range, and eventually we broke above the prior day's high, and we closed higher. So most important thing, you have to understand if you are trading inside the range or above the value area high or below the value area low for the sentiment to be bearish or to be bullish. And sometimes we're coming in from bearish to bullish sentiment or from bullish to bearish sentiment, or we trade inside the range. But the volume profile, this is where most contracts or shares were bought and sold. That's the point of control. Remember, are you trading inside or above or below? Let's go to the next slide here. And what I did, I used the profile. What is the time spent? Some of them, they call it monkey bars. The monkey bars has value time high, value time low. And in the 24-hour, the time spent between the European, Asian market, as well as the US market was lower. You can see here, the time spent was higher in relationship to value low, value high. So if you take the high and low of the chart, since the time spent was higher, sentiment is bullish. Here was a sentiment bearish, but unfortunately we came back in the overnight low, but we broke the prior day's high and we closed a little bit higher. But the time spent kind of gives you an overall sentiment where the markets are. So you can see in the next day after the previous day high and low, we had the range on Friday. This is the low in range of Friday's low and Friday's high, and you would measure the highs and lows, and you have a midpoint at 61, 78, 23, and a 38% fib. So these are the things we use in order to keep us in line when we are trading. Let's go to the next slide. And what I did here, I wanted to show the monkey profile on Thinkorswim, which is now Schwab. But what I wanted to show you is in the 10-day range, this was an inside range. That was the prior day's range on 413. The next day we opened on 415, but we stayed trading inside the range. This is what we call chop or inside range. You can trade between the ranges. This is when you break down and fall lower. This is a breakdown. You didn't stay inside the range. You looked to it, but couldn't get to the point of control. You lost the value area low. This is the volume on the left. Time spent is on the right. And you fell through and you went further lower. Then a couple of days later, you were inside the range. And eventually here we broke below. That was on 420. That was the one I called for the S&P 500. I had it in my prior video, as well as David in our room. We called 41, 45, and we reversed back up. This is a virgin control point, which has never been recent. Whenever you test the point of control, this is the POC. When you're trading inside that range and you break up or break down or trade in it, this is no longer valid. So this is a virgin control point, never been revisited on the way down. And this is a second virgin control point. Usually these you mark them to keep you in line. If you come back to them, they act usually as support and resistance because this is where most volume is. And we broke up. we stayed inside the prior week's range, and eventually we looked above. And on Friday, since we pushed on Thursday, we broke out, correct? So we had an inside day, then we looked above and we closed a little bit higher on the NASDAQ. So is the sentiment bullish? If you take the Friday's high to low, the midpoint is 50%. So the sentiment is neutral. There can be continuation if the bear market is no longer there and the tariff is out of the way. So the sentiment is neutral on Friday, but if the market continues higher, this is a bullish tape. If the market falls back in range and falls back in, pay attention in case of any tweet or Federal Reserve Board or international market on the economy, something comes out negative and it drags us back inside that range. Remember to check us out at Solstice. Get in contact with us. Smash the like button. Let us know what you think. Let's go back to the first slide that I have up here. Remember to how to check us out. Let's go to here. I put the SPY, which is the S&P 500. It has 11 sectors in it. I took everything out on the top. What I wanted to show you is the prior year range from high to low. I usually measure the prior year range for any instrument. That way I know where my rate lows are, where my highs are, and at least the midpoint where I am trading in relationship to the long term. You can use an RSI, a stochastic, a MACD, a CCI, directional momentum indicator to keep you in line. And you can draw a downtrend channel or an uptrend channel when you're trying to break up or break down. The reason why I wanted to show this RSI, you can take the peak of this area to this area and this one here. You can see where the breakout is. Even if I edit the property and I draw a straight line, and I'm going to make this white so everyone can see it, and I'm going to make it a little bit thicker. So the sentiment is actually changing, coming back from bearish tape, and you can draw one from here to this peak or this one here. You can see that we're trying to break out of this range to the upside. We had the 20% in the RSI to the 80%, and that's the 50%. I do use Fibonacci's in the RSI. You can see at 38 and 61 there. Your point of basically your midpoint is 50, so I look for 20 and 80. Sometimes a little bit more in extension. Sometimes you go a little higher than expected on the RSI because it can linger higher or it can linger lower before there is a sentiment change in the RSI or the momentum indicator. At the same time, you can see that uptrend channel when we broke down. I used the monthly measured move. So what I'm going to do is here, just wanted to show you how to use the RSI and the channels to keep you in line when you are trading so you are not biased. Remove the drawing. So we're going to go now to a daily chart 1 year. And what I wanted to do is show the monthly measured move. We know where the annual Fibonacci's are. If I zoom in here, I do have this gap here when Trump tweeted, said, hey, they're going to charge higher tariff for China. We had this gap here. We continued lower. We got a second gap. We fell further down. Then we rallied up on Wednesday. We had an inside day. Then we had Easter. That was a short week trading. Then the following week, this is Friday, Thursday, Wednesday, Tuesday, and Monday. There was a gap here when we looked down. We called a 5,145. You can see this is almost like a double bottom. Rallied up. We got this gap. I'm keeping an eye on this 18 simple moving average and this gap coming back down. You can see the previous day ranges. I should have took them off this chart, but that is fine. It kind of gives you an overall view where we are in a relationship. I am paying attention if we end up gapping up, continuing and closing this gap up here on the charts on the S&P 500 or the QQQ, which is part of the NASDAQ 100. So we trade what we see, not what we think. And remember, we are in a symmetrical triangle. If you draw a channel from up here all the way down this way, we finally just barely broke out this range. You can see it by time is the sentiment has changed from bearish to bullish tape. And all this noise that happened between the tariff and what's going on with Jay Powell, the Federal Reserve Board, I am paying attention what they're going to do with interest rates and what the tariff going to do in relationship to all the tech sectors. So remember, we trade what we see. when you have these gaps filled, they no longer valid, but there's this gap here and this gap here. I am paying attention to both in the 18 SMA in case there is a reversal back in. But if there's a breakout, I'm looking at the 50 simple moving average and the 200 where we broke down from this area. This is last month range from high on March to the low in March, and I extended the Fibonacci's to a minus 123. You can see the 123%, the 125, 125% lower, we reverse back up from the mean on the SPY. The tech sectors, and what I wanted to show in this tech sectors, let's see, it's in this one. I have Apple, Amazon, Google, Meta, Microsoft, Netflix, NVIDIA, and Tesla. I included Netflix in there. We can see in this range that the combination of those 8 instruments, including Netflix, we're trying to break out, and I'm paying attention to that 3,112.28, because if I end up taking this out of the way and I just put Apple, I'm paying attention to Apple and Google. You can see Apple in this area is trying, it's got that little tiny gap where we had this big gap here. If this gap is going to fill or end up getting rejection at the 61 as well as the 50 SMA, that's Apple. Google has a good setup after the earning report. I am paying attention to Google after the push up. Their earning was look above, fail on the 50 on Friday. They sold it off. You have this little tiny gap here, and you have this gap here. In case it does come back to the backside of this channel and reverse, I'm looking for the 200 SMA and F5 where the consolidation was above the 170. So the ES, and what I wanted to do in the micro ES, you can see we had showed in the prior week's video. This was done in the prior week's video. You can go back in history and check it out on YouTube. I mentioned 51.45. David mentioned 51.46. We had that bottom and eventually U-turned and continued higher. And you can see that measurement on the charts where this gap is and this tariff gap. So I am paying attention to this if it's going to break up and continue high. And you can see where my marking is 55.66. So let's zoom down one more time to show it there. Tariff breakout 55.66. So I'm not, I trade what we see. I'm not bullish, I'm not bearish, but the tape is bullish. Pay attention to what the charts offer you. Let's go now, do the measurements on this chart, and I will call it a day. If you have more questions, we're here to help. I'm going to show 15 days range. I'm going to use a 6-hour or a 4-hour. It doesn't matter. I want to make sure I get the consolidation in the prior days in relationship to the prior week's range, so I know where my breakouts are or where my breakdowns are. So if I look at the Monday low, this is my Monday low. This is my Friday's high for the week. I go from Sunday through Friday and I do the measurement. You can see where the support is, where the resistance is, where my 38 fib is, my 50 and 61. But what I'm going to do, go get the Fibonacci's, and I'm going to change the color on them to show you how they will look on the weekly chart. You see, these are colored. So what I'm going to do, edit the property. I'm going to change them to all one color so everybody says, hey, why is this happening? And we're going to backdate them all the way to 4101. So I have them extended to the right. And the prior month range that I have up here, I'm going to take it out so no one gets confused on the charts, okay? I am going to take it out to show you how it would look like on the daily as well as the weekly. You can see those fib extensions going back up from 0, 23, 38, 50, 61, 78, and 100. This is the monthly charts on the Fibonacci. So I'm going to remove that drawing. It is okay. Don't panic. So I'm looking at the range on the extensions in case I get this Fibonacci duplicating to the top side. You know, you'll have 123, 138, 150, 161. I am looking at this level here very importantly in the 50 SMA. If there's going to be continuation going to the 161, if in case I fall back in, I'm paying attention to the 50% and the 61 to act as support, or that would be the 38.2. If you draw from high to low or low to high, it's going to be inverted, so it doesn't matter. So we're going to trade what we see, not what we think. And I hope this
video helped you. If you have any questions, once again, check us out at Solstice or at Axel, atrai.com. Get in contact with us. We're here to help. Take care. Over and out. Enjoy your weekend.